Good morning, everyone. Happy Tuesday. I'm your host, Marcus Stalker D. This is the Euro Trade, and if we're meeting for the first time, I have been trading for 18 years, and 12, almost 13 years out of that, I've been bumbling around prop firms. I'm a commodities trader, so you will see me trade a lot of metals, and also natural gas, gasoline futures, energies markets, and the like. Now I'm looking at silver and gold here. First of all, I think everything is starting to roll over, and that tends to be a little bit tricky on the volume because the volume tends to get split between the old contract and the new one. So usually when the pits used to exist, they used to kind of sit around and play cards until the rollover is done. So no trades for me yesterday. I was looking for silver to, at the very least, tag the Asia low, the overnight low, and that never really quite happened until like super late in the day. So today's looking a little bit better, but again, I'm mindful of the possibility of the rollover causing some trouble. All right, so let's just address Steve's question. So Steve, Pepperstone is not a futures platform. Pepperstone is spot from last time I checked. And spot does allow hedging, but futures platforms don't. You try and do that on AMP, you will find that they will just close out the position. So it's definitely a futures platform thing. Hedging in the futures is not done on the same product via outright futures, but rather a combination of options or one option and one outright futures position. So the hedging that you're talking about is basically just outright hedging on spot. And if it works for you, carry on, but just know that you won't be able to do that on futures, regardless whether you're trading with Topstep or AMP or somewhere else. But yeah, spot platforms such as FXCM, such as Pepperstone, such as if we go to Europe, I suppose you have London Capital Group, you have a whole bunch of spot platforms that will allow you to do that, but not on futures, because futures spreads and hedging, it's done a completely different way. So anyways, I forgot to say I'm a Series 3 qualified trader, but I'm not a CTA, so whatever you hear and see today is for educational purposes only. Make sure to familiarize yourself with the risk disclaimer that Bruno has already posted earlier. All right, so let's see what we have today. But again, I am not sure that I want to get involved in lackluster volume and movement. However, I'm still gonna track what they want to do around the levels. Looking at natural gas as well. Asia did nothing. So if I go to a 4-hour time frame, it's a very quiet one, pretty normal. But if they decide to reach 420, all the way down here, it's where the average daily range low is located. So maybe there's something there for longs. In regards to shorts, I don't know. We'll see. I would probably need it to come up to a little bit of a higher area before I do anything with it. The call wall is still at 450, so that hasn't changed. But yeah, so it's rollover. Even the options activity and how they're moving on a day-to-day basis, everything is slowed down quite a bit. So we need to wait until the rollover is done. But even gold has come down from, let me find the gold chart. It's come down in the ATR on the day, from like 170 ticks per 30 minutes down to 125. Now, for me, that's still a little too high. So this is why I think silver is actually a smoother trade. When it comes to the value areas, at the moment we're opening both of these below value. You can see it here. There's a purple area is a value area. And it is a volume profile based one, but they are reasonably similar. I think the TPO value is saying it's a bit higher, around 430, whereas this one is saying 250. So I prefer the TPO values, but this is just as useful. So I'm seeing the silver trade go above the Asia high, and now they're reversing. So if they hold that, maybe there's some kind of a failed auction set up there. But again, it's not really a trade that I would take in the live, especially not this early in the day. For this time of day, I always say that I like to focus on DAX, which is what these streams were supposed to be, but then the DAX never came. So we can have a look at DAX as well, though. Just in case you traded elsewhere. All right, so opening quite a bit below the value. So value area is all the way up at 23,700. This open is a little too big though, because if I'm going to try a mean reversion trade, I have some rules around it. And the rule is that we cannot be over 1.25 distance in percentage from that area. Even DAX is a bit slower today. We are still inside the initial balance, so until that changes, again, no move. Gold is still inside the initial balance. Silver is looking, again, a little stronger, but they are reasonably correlated today. The other option would be that silver maintains the call wall as a support on the way up, and then eventually builds volume to go into the value area acceptance. This is a COMEX value, it's not the London value. When LME opens, I like to anchor a VWAP to it, and that becomes yet another sort of orientation point, because the LME is very important in the pricing of certain metals. So it's an interesting one. You may want to try anchoring it to 11:40 a.m. UK time. So a couple of options, so value acceptance or the failed auction if we get stuck in a range. But the failed auction is probably going to be a partial one because of the strength of both of these products on larger time frames. So I would be looking for maybe to take it down to VWAP at most in the case of a failed auction. And in the case of the value acceptance, I will be looking to trade towards this GX3 level, which is up at 50.80. So it's not a massive trade. It would be kind of a sustained auction intraday into a value acceptance, and then expecting a rotation to the other side. GX2 tends to be a strong level, but it's all the way up at 51.50, so we would need some kind of an external catalyst to keep pushing it all the way there. It is within the day's range, but let's see whether they get stuck in a consolidation and some barcoding like they do about 70% of the time for this summer day, or not. On a 15-minute time frame, you can see that it's already kind of establishing a bit of a range. It's not very regular. It's a little bit messy, but yeah, call wall so far is staying. So let's give it a little bit more time to get some more MGI, and then we can have another look, maybe towards the end of the stream, what they want to do with it. Yeah, gold is not looking great to me. Now let me just check whether where we are with the rollover as well. And I saw that copper is trying to roll into March. Gold looks like it is beginning to build volume in February, but it's still not significant enough. So we've got 90,000 contracts still traded in December, whereas only 10,000, but it is a bigger month. So let's have a look at silver. Yeah, silver wants to roll in March. Roll too much, even. And then copper. Copper is almost halfway into March already with volume. So I'm just gonna show you. So here's copper. Let's make that smaller. This is the current month, it's December, and this one is March. So out of all of these, I think copper is the one that's definitely ahead of time. So they are attempting to roll already, but the roll may not be done for another few days. So yeah, not every day is a good day to trade. If I see anything particularly obvious, obviously I'm going to jump on it, but at the moment I'm just kind of chilling and observing. Observation is just as good. And you can, you can observe and then you can journal that too. It all leads to situational awareness and raising your skill level. So here's another reason why I say that silver is stronger than gold. Silver has reached the Asia high and also extended the initial balance. So the initial balance is these two candles here. And gold, quite a bit spikier. You can see the price action, very different, right? So gold barely goes over VWAP, then sells off a bit. Silver, almost a Maribozu with no discernible wick. And then that continues on with a slight extension into the initial balance high. And now it's trying to hold above Asia high. So maybe the call wall might be an area to swipe. So maybe a test of the call wall, then a reversal. At that point, if you're looking for like small range plays, you or I need to go down to lower time frames and maybe look at some tape to see whether maybe there's some absorption happening of sellers. Or maybe there's a sweep, and anytime you look at tape, it's always a question of what is happening after. So it's not like, oh, I saw a sweep, let me go in. It's like, all right, there was a sweep. What are they doing with it now, after the sweep? So that's usually how I approach tape reading. But yeah, silver is still stronger. This has been going on since last week. Earl Wallace is saying, hey, is that purple line the EMA? No, it's VWAP. It's Globex VWAP. So it's anchored to the start of Globex. That's this candle. And then it effectively tracks both volume and the average price. So that's why I kind of like it over the regular moving averages. Because the regular moving average is just like, it's an average. Yeah, it works, but I generally like to look at the moving averages on much larger time frames, because those time frames tend to have a lot more trading information inside it. And I am an order flow trader, so anything that doesn't include some kind of volume or order flow, I don't really resonate well with it because I feel like you don't get enough information. I also want to see the levels that I use constantly being reaction zones. And if they're not, which is what I find with moving averages, it's always a bit like, nah, it either overshoots it or it just doesn't respect it at all. And especially that is true for low time frames that have a lot of noise attached to them. So lower time frames, intraday trading, I prefer to have some sort of volume component to any average that I'm doing. So this is also why I try to match up my ADR low and ADR high, which is just an average of the movement, but it's still the actual movement, right? And then I match that with implied volatility, high and low from the options. On days when those two are nearly completely together, that tends to provide a stronger setup. But yeah. All right, so it seems to have lost a bit of steam here, which is not surprising for this time of day. What's the thing on the right side? So this thing is the visible range volume profile. And then I have the fixed range volume profile for the regular trading hours. And again, profile, volume profile, they give you a pretty good smushed version of how the auction was progressing. And again, that's why I resonate towards that. Back in the day when I was just a swing trader, I didn't really use any of these. But the more I went down into intraday, I felt like just a pure like price action, supply and demand, it wasn't giving me the full picture. And I'm quite nosy, so I want to know everything about everything. So I wanted to get involved in trades that I fully understand. Does that make sense? So if I can explain myself a playbook that I can repeat over and over, that's better for me. And the possibility of reading how the price is progressing in light of what should happen with that particular playbook. So for example, with the value acceptance, if silver does that, let's make this bigger. I want to see a fairly confident hold into the value acceptance. I also have some confluence levels. I have the Asia high. So if we don't manage to reverse from the Asia high, that is actually a little unusual, and that opens up and strengthens the possibility of the value acceptance. So the value acceptance means this purple area, look at it as a zone. So if I were to extend it all the way to the right, you would be looking for the price to go into it and then to hold at least a 30-minute time frame inside it. And sure, you can front run that if you have a good reason to. I wouldn't be front running trades that you haven't lived through in some sort of a systematic way prior, and then you can see and you have experience of how it looked last sort of 50, 100, 200, 1,000 times when you did it. And then you start to recognize your pattern matching brain takes over and you start to recognize what's a good one and what's a bad one. And obviously tape can help, but again, tape for some people causes a lot of overtrading because you're trying to, some people think that you have to take every single sweep and absorption and iceberg order that you might see on the chart. But the real trick, so to speak, is to have a level, then to expect, have an assumption of what should happen there, and then also have an invalidation of what shouldn't happen if you're looking at, for example, value acceptance. I mean, we are on a combine, so, maybe I could just illustrate. And I'm pretty good at cutting trades early. Like if they're not doing what I want them to do, I will not just sit there. It's also the reason why I use slightly larger stops because, I'm not a young person, so my brain doesn't work as well anymore. And my eyes seem to be failing me every so often as well. And I need a little more time to decide. So, it never used to be the case, but hey, none of us are getting younger. So yeah, let's see what happens into this value area from yesterday. In the most ideal situation, we accept value, then we go back to test stage and high, and then we continue. But that's the, the perfection, which may not happen. Let's see what's happening on a 2-minute. I mean, the volume is pretty sketchy. And they're falling on a 5-minute as it's rising, right? As the price is rising, volume is falling. So until that kind of changes. So whenever I see that, I want to use the larger time frame and not lose my eyes. I will use very low time frames and tape more on range days because they become very prone to like mismanagement. So you have to have precision, timing, and accuracy to swipe it from like the high or the low of the session before they return it back into the range. And you just can't do that. I mean, you might be able to guess, I suppose, but I don't really like guessing. I like to have the event, then read it rather than guess, because we're not fortune tellers and neither of us has a crystal ball. But those assumptions have, to me, the way I do things, have to have some sort of an event that goes along with them that will validate whatever I'm trying to do with it. So yeah, 7 minutes until this candle closes. Let's see what happens. Industry term, smushed. That's right. Look it up. So Earl says, only been trading for 6 months and just now getting profitable. Yeah, well done. That's a very, very short period of time. Many people take 2 to 5 years to properly get profitable. So one worry about anyone only trading for 6 months is that you've only really experienced one type of a market condition. So once you run into the next change, market state change, that's where your skills grow even more. But almost inevitably, that is met with a drawdown period. So it's not like a linear thing. It's not like, oh yeah, you wake up one day and like, no, I'm profitable. It's like traders, if I've learned anything in the 18 years, every single person who does this professionally, we all have cycles. So you are profitable and you're doing well, then you get into a drawdown, and then you're changing and tweaking things until you turn it around again. It's just like a never-ending cycle, and it's normal, completely normal, to have, like, I've even known people who've had like 2 years of, drawdown after being profitable for 7 years. So it's a journey. It's more a journey of self-discovery and self-awareness than anything. Any levels are the easy part, but your own mental triggers that cause you to tilt, that's definitely the bigger problem and a bigger issue. And yet many people run away from it, and then they get into this cycle of constantly doing the same thing over and over instead of going, hold on a minute, this happened last time. So the markets, like let's say markets were quiet, I was trying momentum trades. Why didn't I try a range trade? It's like, what's going on there? And then you go back to see objectively how the chart looked after everything's done. That's where the back test is useful. But any sort of back test of like, oh yeah, let's test the levels. No, let's test the yourself and how you behaved versus what actually happened. So once you know that mental trigger, you need to go and put it in your plan. And, I like the way Jared Tandler does it. He kind of marks it as game A. So your A game, B game, C game. A game is when you're following on all your rules. You feel like you're in the zone. You're reading the market really well. And then you have B game, where you're sort of reading the market, but maybe your execution is leaving a lot to be desired. And then C game is when you're just turning into a muppet, grasshopper, clicking buttons with no rhyme or reason, getting annoyed with the market. So even though the market doesn't care about your emotions, doesn't mean you shouldn't. So that is key to remaining in trading for long periods of time. Self-awareness. I know it's boring, right? No. We're going to hold hands and sing songs and sing Kumbaya. But it is what it takes, we don't have the pits anymore, so it's not like you can stand in the pit and go, oh, what's Goldman doing? what's happening around the room. They are all sitting, or not even trading, like there's a lot of algorithmic trading today. I think over 84% of all institutional trading is done via algorithms, including market making as well. Right, we've got 3 minutes before we know what's happening. And again, like I said, we'd like to see some pullback. Gold is just now extending the initial balance just now. But compared to silver, its GEX2 is already hitting at 40.50. We do have the negative gamma today, so it might overshoot and gold way up to 40.65 and 40.80. But at the moment, it's that time of the day when any kind of momentum type moves, I look at them with great suspicion. Let's put it that way. It's not that they don't happen, it's just they happen very rarely. So probabilistically, it's more likely that, let's say, gold will fail around this previous area of supply, which is here. And it's only an intraday supply, so they do run through those for liquidity purposes sometimes, or a lot of the times. So yeah, let's see what happens around GEX2 and Asia High, because, you know, the difference between these two is that silver is already breaking out of the Asia range. Gold does not. So that makes it a weaker trade. Doesn't mean that it won't just shoot up the closer we get to LME, because it does. But at the moment, I want to have a decent setup because of the rollover. Okay, so now what's happening on silver? It tried to get into the value acceptance. We have 1 minute and 45 seconds before this 30-minute TPO period closes. It's having a selling wick. So I did not want to see a selling wick if I wanted to do a value acceptance, because that means that the value edge, the outer value edge from yesterday's COMEX session, has interest. Somebody is going, yeah, we tested a distribution curve, let's sell it. And whether it's a sustained selling or not remains to be seen. Today, gold and silver are pretty highly correlated. Not a factor of 1, but 0.9, so that's pretty high. So again, you have to watch both of these, or I have to watch both of these for a bit more awareness. So yeah, the volume value low from yesterday on gold is at 40.46. Now, on the TPO profile, it's actually only 2 ticks to 1.5 points difference, so it's at 40.47.5. So that's pretty much the same. So yeah, so either value acceptance or value low reversal, and this one would go into a failed auction. I'm a little bit iffy on the shorts on silver because of this call wall location today, because that is a sign that call wall is held. So if anything, I think gold maybe has a better chance of rotating lower. But even so, we're already at the bottom of the implied volatility for the day, which is higher than the ADR. So we have 40.15, which was here, got overshot. It's normal in negative gamma, and then reclaimed. So now we're kind of holding above VWAP, but the proximity of GEX2 is not really calling me to go into longs on gold. Silver, on the other hand, looks better, but look at the price action. Also, another thing with value acceptance trades, the bigger the move in the mean reversion to the value, the less likely it is that this smoothness of the value acceptance is going to be drama-free. So if we've already run up massively, I would actually want to see a pretty decent pullback before I go into this. But the good points on this price action today is that we are holding all green candles or blue candles on my chart, and we're breaking outside of the Asian range, so that's a good thing. But now I'm just going to cycle through different time frames. just to see whether they can give me a bit more overview. Right, so we had a reaccumulation, obviously around Asia high. Let's see if they can get down to at least Asia high, maybe even another test of cool wall, but it's creating higher lows and higher highs. So it's still somewhat pushing, but because of the big correlation between gold and this one, just being a little bit cautious here. And it's the time of the day where I don't actually usually trade metals. I like to start them after LME. So once LME begins at 11:40, I typically look for my positions from about noon my time. I'm in the UK. And that tends to open up the possibility for some really nice moves. A lot of the times I will not necessarily hold them into COMEX, so it will be like a 60 to 90 minute trade. But if we're coming away from like a big area that was established prior, like a supply and demand, then I would try to hold them through IB, initial balance, and I would try to withstand the head fake that we usually get during the first sort of 30 minutes of COMEX. So let's say I'm long, I need to have enough space between my entry and the start of the COMEX initial balance just to absorb the head fake. And if the market doesn't move far enough away, that is when I will go, I'm not going to be able to withstand the pullback. And that's one side of looking for swings intraday, where you have to know that the probabilistic times of day when the pullbacks are likely, and then not freak out and look for a pretty particular move to happen. So I'm just going to get time and sales up here. Now I have micro silver, but I'm looking at the tape from the full silver. I'm just filtering out the ones because I'm not interested in people trading one. And it slows down time and sales quite a bit. So it makes it a little bit more palatable. Earl, I haven't used MACD since the first 3 months of my trading, which was back in 2007. Someone's asking, could you explain what IB means? Initial balance. It means the first hour of any active exchange open. So for London, the first one that you have is the London session, but LSE is more relevant to the equities like DAX, for example, and to a degree when things are moving, ES and YM. But then you have the LME, which is sort of the first 40 minutes since the London Metal Exchange opens. That's at 11:40. And then you have COMEX for the metals. That starts at 1:30 p.m. my time. So the hour of 1:30, 2:30, and then it finishes at 3. So then you have new reference points. You have IB high, IB low, literally just as a high and the low for that hour. And then after that, you look at how the price is behaving around there. You can even derive information from the size of IB. Like yesterday, for example, both silver and copper had really small IB sizes. I'm just going to clear my throat. Yeah, so the auction, the way it works is that usually if something is inside the IB, it's still sort of market maker territory. You can even derive information from the super large IB. Like yesterday on ES, we had 80% of the entire session range that was done during the initial balance. And I had some of my personal coaching students who were like, I'm going to go long on a break of IB. And I'm like, So how much statistical space do you have then? It's like 80% of the day has already been done. So wouldn't it be better if you look for a pullback and then maybe even an extension of the IB, the opposite side, then you have something called the neutral day fade. But it's not a different time frame. Initial bounce is always the first hour. I think you're mixing it up with the opening range, which can be either 1 minute, 3 minutes, 5 minutes, and 15 minutes. I personally don't really use orbs because I don't trade that early. And I actually hate trading during the initial bounce because I feel that I'm not a scalper, so my trades last at the minimum 45 minutes, right? So for that to happen, I need to have a pretty sustained movement in the same direction. And that's usually not happening during the initial bounce. Initial bounce is for, you want to swipe a few ticks here and there. I don't swipe a few ticks. It's a waste of time for me. I want to swipe 70, 100, and on certain days, if we're moving away from a big level, 200, 300, 600 ticks. Those are the types of trades that I look for. But the time when I will scalp is if it's a range day, so there's no other types of trades available. And then I'm basically using the established session range, and I'm looking for either the smash through the session high, session low, or maybe even initial bounce low and then a failed auction. That would be one setup. But then I mentioned the neutral day fade. So it's when the initial bounce extends one side, rotates all the way from the failed auction into the other side. Then you, a lot of the times, have a possibility to go into something called a neutral day fade. So your neutral day, why? Because you've extended it to both sides. So it's like an elastic band that's being like stretched both ends. It's like they're pulling it, right? And then you have the possibility of that second trade snapping into the middle of the range. Why the middle? Because that's the highest probability target. Because you can't expect full rotations either side. There's always like one side that's stronger and pulling more. Desmond is saying, just joined. Are you long silver? No, but I would like to be. You know me, Desmond. I don't trade super early in the morning. So yeah, if we test the Asia high, that could be an iffy trade long. I'm just mindful of this sum of day being a little bit less lively on metals. Yeah, so the opening range trades, orb, opening range break, that's something that works okay on equities sometimes. But even those, to me, need a level, right? So not just like, oh, opening range break, let's go in. It's like, where is that coming from? And I think that's like one criticism I see with other people. They're like, orb, let's go. It's like, what is the situational awareness here? Are we at a mean reversion? And then some of the worst ones, let's try one. I'm going to change this to micro silver. Okay. Now let's see if they push, because if they don't push, then there's nothing. I'm also going to change this VWAP to maybe anchoring it to this big drop that we had, because we took that out. So it's probably quite a good reference point. I mean, we're above that, so that's useless. Okay. All right, so I have a 45 tick stop here. This is a 2R. Micro silver. The value is slightly different, but it's all right. And I'm going to give this a marker on this side, so we're at 320. We'll stop at 100. I mean, in the ideal world, this stop is not that great because it's cutting through candles. And then 2R is at 775. Just underneath the GX3 area. But yeah, it's anyone's guess whether they're gonna actually take it higher or not. I mean, the tape is saying yes. It's not a clean tape. It's like a little bit scattered with these guys will be long, but these guys are like, nah, actually that's solid value. What are the little guys doing? I mean, the little guys are just gonna be long with the momentum, aren't they? Yeah. Because it's the bigger institutions that are making decisions. I'm not really seeing too many big players here, though. Yeah, so they're probably still asleep. We're commuting to work. But yeah, so let's wait and see whether we can hold above the initial balance and above Asia high. If we can't, then that will be the end. So yeah, in the ideal world, I would actually have my stop down below the call wall. But I just don't really want to risk that much here. And even micro silver is pretty expensive. It's $5. It's not really micro at all. It's like $5 a tick. The full silver is 25, so that's ouchie on the prop. So yeah, so next thing I'm looking for is that we hold inside the value, that we hold inside Asia, above Asia high, and obviously above the call wall as well. And now sometimes if I start off with like a slow position to try and build it, I will have an idea and then I will use a larger than average stop, but I will use a much smaller size to begin with. And then I look to kind of scale and build a position inside that zone as it's kind of moving. During COMEX, that's probably not that great because it's like everything's flying on a lot of the days. So it becomes a lot more difficult to kind of build something in a zone when the zone is tested and then in like 3.5 seconds they kind of shoot right outside of it. So you can't really build a position during that time of day. But when it's slower, you can argue that you can. It's just on the combines and beginning stages of your funded accounts, silver is too expensive. So you would need to go down to maybe copper. Micro copper is great because copper is slower and it's $1.25, so a little bit more palatable risk wise. And one of the things that bothers me is that when tape is really slow, so this is something like I like slower products, but I don't like slow tape. I really don't. Like I feel that when they're doing like this, like a trade every every sort of like 15-20 seconds, it gets a little bit tough to understand what is it that they want to do here. So I'm just going off the basics of the break above the Asia high, break of the initial balance, the fact that silver has been stronger, and the fact that it's trying to tag this value. So I'm not going against it. I'm trying to go with it, but I am aware that we've already come up so far. So the ideal value acceptances for me, which is why this is not something I would take in my live, is when we are opening within 0.4% from the value area, maybe even less than that, so 0.3, 0.2. And the move that we had pre-market was not looking like this, right? So it was more kind of, let's say, looking like this, and let's say you had a value here. This wasn't the case yesterday, it was a range day. But let me just try to find, yeah, okay, so imagine that we're opening right here. So not too far away from value, and then it accepts value, maybe wicks around it a little bit, but then ultimately shoots through. So this is probably what might happen on silver as well. But the problem is what minimizes the setup strength from like an A+ to at best B- is the amount of the move that we've already had. So I don't typically like doing breakouts, but you know, at the time of the stream, this is the only thing I have. And like I said, sometimes the mean reversion D needs to be jailed and put in the corner where she doesn't cause trouble. But I am a core mean reversion trader, so everything inside me is saying short it, short it. But me seeing that we held above Asia high and that we're holding above the call wall and going into the value, it's telling me that that mean reversion side of me needs to shut up for a bit. And then if she's right, some days I'll be like, yeah, you see, you should have shorted it. You should have mean reverted. So that's kind of a view into how I talk to myself. Lovely. But it's not like a negative self-talk. It's just like, you know, weighing the pros and cons. And then if the mean reversion was the right call, but I went into a breakout trade anyway, I would just say, well, that's what we had at the time. I couldn't go against it because there's no red candles. There's nothing else to tell me that, you know, we're going into mean reversion. Now, if we don't manage to stay above here, this value low, now that would be an MGI change of sentiment, right? It will mean that we really gave it a good go, but it failed. So they never actually continued into it. And like I said, at this time of day, it's all very, very tricky with metals. And as soon as I finish the stream, on most days, the market kind of starts livening up because we're close to LME, right? So it starts to move. So yeah, it's like pulling teeth. So for those of you who are new here, we were supposed to have these streams where DAX was supposed to be traded, because I trade DAX for this time of day. And then the DAX, they had problems integrating it into the platform, and it never came. So here we are, like a year and a half later, trying to trade metals at the time of day when I've never traded metals, but, you know, that's why I'm on a combine. DAX is beautiful for this time of day, and it's a shame we don't have it yet. But having said that, even DAX is quiet today. So look at it. In fact, silver kind of looks more lively. DAX usually extends the initial balance. It has not done so yet. So again, don't really have a setup there either. I think the equities roll in December, don't they? So they don't roll. Like, for example, natural gas, December contract expires now, literally today. But I think equities, because they are quarterly contract, the December actually expires in December, which is like, wow. Right? Something that actually makes sense. Topstep fees have increased significantly from 10.50 to 8.51. So isn't that like a smaller number? So that doesn't make much sense. So, I mean, I don't know, am I reading this wrong? So it's like Topstep fees have increased significantly from 1,050, I don't even know what that is, to 850 total. So that's a smaller number, according to some of my calculations. Is it not? Like, am I crazy here? I don't know. And what fees are we talking about? Are you talking about data fees? Did you go into the live account? Because in the live, you have to pay professional data fees. And they're always expensive, trust me. Oh, Coach Robert is here. Yes. Good morning. Or, don't know whether you've been to bed, knowing you. Do gold and silver correlate like NQ and ES? Not quite. On some days, yes, but they are not. So they are actual physical commodities with their own requirements. And although some requirements are similar, they won't be the same. So on some times of the year, they have zero correlation. Like silver will be doing its own thing and going absolutely insane, whereas gold will be quite static, or vice versa. Silver is doing nothing and gold is going crazy. So you know. All right, so we got 8 minutes before a decision point, but it looks like it's going into a range. Of course it is, yeah. What's gamma? Gamma is the overall positioning of the market makers that is usually the opposite to the investors' side. So if the investors are long gamma, the market makers have to be one core position short gamma. And then what they do, they will hedge in and around the outright futures to generate liquidity, A, and B, to remain delta neutral as possible, because they aim for the market neutral state. So yeah. Do I trade any agro products, soy or corn? I think in my life, in my 18, 19 years of doing this, I think I've placed one soy trade and one, maybe two corn trades. Corn is too slow for me. So I know that I like slower products, but maybe when I'm like really old, I'll be like, yeah, corn. But for now, at 45, I'm still on the side of I still need some movement. You know, I still need, because corn is one of those products that has a lot of demand at a particular time of the year. And then for all the rest of the times, it's very, very static. So I don't know whether you would trade it outside of the higher demand, or maybe a problem with demand. So that could be a thing as well. But outside of that, agro products for me have a different layer where you have to know a lot about the macro side. And I've spent 10, 12 years on the energies desks. So I know a lot about energies, and I think at 45, I'm getting to that age where it's getting a bit tough to learn new things. Not like completely impossible. It's just like learning a brand new product from scratch. Slightly outside of my range at the moment. I'm at capacity. Put it that way. Gratitude. So yeah, we're tagging the initial balance high now on silver. So we'll see what they want to do here. This is a decision point. And notice I'm only in with one. I'm not plowing in like a lunatic, because it didn't prove to me that it wants to do what I'm asking it to do. So, but if the initial balance high holds into the next 5 minutes, I might add another contract. And again, the iffiness of the setup is the fact that we've came up so high. So it's effectively a breakout from initial balance setup into the value acceptance. But if that doesn't happen, then obviously I would rather get hit with just one rather than 10 or 50 or whatever I'm trading. And I almost always expect a drawdown, and in fact I welcome it, because on the setups where I'm looking for a decent reversion, it will give me a chance to work into the position very slowly before it actually makes the main move. So I actually prefer it kind of dancing around my entry, as long as the stop is not at a suspect place, which arguably this one is, because really I would need to, to do that, my stop, where I would be comfortable. I would like to have it sort of down here. And then as the price is kind of dancing inside it, you effectively start to minimize the average entry. But it has to be done, like, I see a lot of people doubling into, like, basically martingaling into a position without actually knowing what the max position default is. So let's say max default is 5 micros. So then you plow in with all 5 at the same time. And then the market turns around, doesn't work out. Then you go in with another 5 because you think you're right, okay? And then the market goes, you're right, you're wrong again, and then you plow in with another 5 and another 5. So now you're like 150% bigger in the position size than you intended to be. So I do it the opposite way. If my max position size is, let's say, 5, I would start with 1, then I would add maybe 2, then I would add maybe another 1 or 2 when the market proves to me that we are doing what we should be doing. So scaling in around the zone of interest is very beneficial once you start trading with bigger size. Obviously, you don't have to worry about it. You're trading like peanuts. But if you get to like 50, 40, 50, even 20, I would argue that you should start slower. To start with 5, maybe work up to 20. And for now we're holding above the initial bounce line. We have 3 minutes until the close of this this area. But yeah, that's kind of how I would do it. Give it a wide berth, and then as it kind of ebbs and weaves, you minimize the stop loss by averaging in, so getting a better average, and ultimately you end up with the same stop loss. It's just the approach to how you're managing the downside is a little bit different. And obviously no martingale. So you don't go 5, 5, 5 when you've only decided to go 5 micros. So you end up with 15. And it's like, oh, it's not working, let me add more. Like double face palm, the Picard meme when he's sitting there like this. How I go sometimes with some of the people I see. Do you have a daily loss limit? So on this combine, no. Because frankly, I can't really do anything with the combine. So it's not like, oh yeah, I'm seriously trying to pass this. It's like, unless I decide to go back to the XFA stage or something, I don't really struggle with stopping on a bad day. Because, again, if you're working on the basis of 3 trading setups up to 5 setups in different time zones throughout the day, like let's say I will allow myself 2 trades for London, 1 in DAX, 1 in something else. If they don't work out, I won't then continue to trade all 5 for London. I will then wait until either LME or COMEX, whichever one gives me a better setup. Sometimes I don't trade for the LME. I will wait for COMEX because it's not looking right, or we're not at the levels where I want the price to be. And then if those 2 work out, I then have more buffer to trade towards like what I call the day range fill time zone, and that's usually in the last hour of NYMEX. And again, if one trade works out, then I then have more buffer to continue on with the final hour when I do trade power hour equities. So usually I will choose YM for that purpose if I really want to be trading at that time. And then sometimes I don't get any setups until we get to day range fill. Nothing. So yeah, but 5 trades per day, do or die, like whatever happens in them. And sometimes you will see more trades done because I'm scaling in and out. So it looks like it's 20, but it's actually not. Price return to range seems to be holding. It's not back into Asia range, and it's not back into initial balance range either. So I don't think there's time for shorts yet. I would need to see a commitment both with IB high and with Asia high. Right now we're above both, so there's nothing to do here. But it is slow, Christ. It's that weird time of the day. We go into a range, we range, then D finishes the stream, and then it starts moving. D brings no volatility whatsoever. Yeah, Coach Jack trades them. Coach Robert is correct. So if you want to know how to trade agros, then go to Coach Jack. He knows so much stuff about it. Like, I don't know anything about it, so I would still try to trade it like I trade levels. But I have traded meets with Coach Hoop's help. So he's kind of guided me through what he's seeing and what fundamentals are and what should be expected. And then for those products, my levels did work. And for some reason, the less speculative products, I find like things like VWAP are a lot better. They don't like overshoot it and then reclaim it. They kind of come up to it, touch it, and then just do whatever needs to be done. It's beautiful. But I feel like I don't know enough. Like I would need to bother Coach Hoop every day. It's like, I want to trade meats today. Can you like sit down with me? And I mean, we chat a lot anyways, right? So he's my trading buddy. Because he will, he will trade, because okay, so let's go back in time. So back in the day when Topstep had Squawk Radio, Hoop had a show, and I was a guest on there because I was the first female funded trader. And then we got to know each other because we were both trading crude oil. So we were like chatting about setups and stuff all the time. And then we got reconnected when TopstepTV started. So I joined TopstepTV like on the second week when we started. And that was amazing. It's nice to see it kind of come full circle, all the like let's get the band together, it's like Eddie, Hogue, MP, he was called Nebraska back in the day, because that was his username, Nebraska. And it's, yeah, I don't think I'll be adding any more products to my arsenal. I think I've got enough of them. I've got RBOB, natural gas, heating oil, obviously crude oil sometimes, but crude oil, I think it's better for options. I don't think it's a trade that I want to be taking any more intraday. I've got silver, copper, gold, YM, DAX. I mean, Christ, that's enough, right? And no, I don't look at all of them every day. I will pick 3 for the week that look the best, and then just try and focus on them. Nice little push there. So yeah, initial bounce high. Still holding, so still nothing else for me to do here. Pause of the mouse. Step away from the mouse. It's not like, when you're trying to talk down somebody in a very tense situation. Put down the gun. It's like, put down the mouse. Step away from the mouse. Because to remind everyone, I'm looking for a value acceptance here. So let's make this a little bit smaller. And then, don't know whether we got enough volume for a full push and full rotation. But yeah, GX3, just under it, for a nice rotation through. Whoops, my dog is going nuts. Must be the Amazon man. Amazon man. Are you in a sell or a buy? Well, I'm in a buy, obviously. Stop market sell, limit sell. So it's a buy. Tori Moore says, do you think a power hour serves a setup? Feels like PA goes crazy during it. So yeah, there is a very specific combination when we've had a fairly sizable down day with heavily negative delta. So it's not like, oh yeah, every day you trade power hour. And then they usually do a stop run from either 1 or 2 inside lows, as I like to call them, and then they run it back up. And you can see that on the tape. So you can see usually a sweep through those nearby lows, or they do the session low or low of the day. So they take it out and then they reverse and then they keep going. I've seen, not too many times, but I have seen power hour moves where on a heavily negative delta day, when they start to shave it off, it leads to a short squeeze, and we've gone to a full auction fade that turned into a failed auction, massive reversal, rotates through the entirety of the initial bounce, and then it just kept going. And it wasn't earnings, it wasn't anything like super special, it was just like the crazy times. I think it happened during COVID, but usually you can expect, at least, like I like to use, let's say, let's use ES because I know many people would be familiar with it. I use about 40 ticks on ES, so about 10 points. And then I usually swipe to get 50 to maybe 70 ticks, but usually it's like 1.5 R. It's not like a super massive trade, but the conditions have to be very particular. So it's not like, oh yeah, we had a big down day, let's fade it back up. It's negative delta. It's having certain levels from a larger time frame that that are being reached, and then a stop run, so sweep through the lows, relevant lows, and then a reversal. But negative delta, heavily negative delta, like minus 20K, needs to be present at that time. Can I do a stop buy, a buy stop? Coach Robert is saying, yes. You can. I don't like buy stops or sell stops for that reason. For the same reason, slippage. Not so much on hexaphase and combines, but oh my god, in the live. So let's ask Coach Robert, did you ever have a good fill on a slightly larger size in the live market with a buy stop or a sell stop that didn't kind of slip past a few? Like, you need a pretty good push for that to work, right? I don't think we have that right now in silver. It's more just like, oh yeah, let's just chill here. Have a few drinks, mingle. That's what this price action looks like to me. It's probably going to go up at some point, but this is where the slow tape kind of kills me. Yeah, market orders on live. I like market orders. I don't mind them because, again, I start slow. And then I suppose it depends what you trade, right? You're in NQ a lot of the times. So NQ to me, yeah, that I wouldn't really necessarily use market orders, even though I have used market orders on NQ before. But it was like when it was a bit less crazy, a lot less crazy. It was before COVID. And then even during COVID, I was still trading it with quite some size. And then, I had my biggest year ever, and then I decided to pipe down on the positioning. Yeah. But yeah, I don't know. I mean, NQ is just, it's like gold for Coach Robert, right? I just cannot stand the thing. Even though I'm not like, oh, I'm not profitable. I am. Like, sometimes I would say that I'm probably even more accuracy on it because I don't ask for much of it. But what I found really difficult is that I always used to have a negative risk reward on it. So I would swipe a trade, it would win, but it wouldn't be the trade. Like, it would be like a tiniest portion of the day. And I don't, like, for my own flex, I don't somehow like doing that. I like to take 30 to 40% of the day's range. And somehow I can't do that on NQ. Unless it's like a weird outlier day and it just keeps going in a single direction. It's just, and as soon as they open that chart, I'm like, oh god. Like, last time I was on Fast Markets, Hogue was like, what do you think of NQ? And I was like, here we go again. We're looking at NQ. Oh, I think I'm in the last hour of Fast Markets today. I need to check. But I think I'll be on from let me see the schedule. Hold on. Is it 18th? Yeah. So 10 a.m. Central, that's, I think that's 4 p.m. my time. Yeah, so the last, no, 10, 11, 12, 1, 2, 3, 4, yeah, 4 p.m. my time. And then on Thursday, I will be on group coaching. That's at 12:15 p.m. Central, so that's 6:15 my time. Yeah, but again, I don't know. This rollover business. But you see what I mean? Like the time of day, right? So people are like, even Coach Robert's like, I don't care about time. I do care about time because look at it. So Asia, post-Asia, pump, and now we come to this time of day pre-LME, and it's doing this. It's like, why? And I know why. It's because it's the strange period before the next exchange officially starts happening. So this is gonna take a while to do anything, if it does anything at all. Right now, again, I have no invalidation things. So we're sitting above initial balance. We're consolidating above Asia high. Call wall was reactive. We are really attempting to push back into the volume value from yesterday. I just needed to create a higher high. But I don't know whether volume is enough for that right now. So just you wait. I'm going to get off the stream and it's going to go whoosh. Shoot up. Like a go. Yeah. We are trying to change the time on this in light of DAX not arriving quite clearly after a year and a half. So yeah, this is going to be more a metals show. But if it's a metals show, it should be at least covering the metals exchange, right? LME. Otherwise, we'll just be watching paint dry forever. Derivative J says, slippage, market makers retirement fund. Well, I don't know how much they have to do with it. Ahmed, thank you with your for your lovely opinion, but I will respectfully disagree. I just think it's needs more time to work. So it's not dead. It's just slower. So again, you need to develop patience. Patience. If you don't have any invalidation points and you know that the volume is going to be less, but you still want to be in a trade, because I don't want to find another trade right now. I still see this as a valid trade. We haven't exited the value. We're still trying to push back into it. And we're still, again, holding above Asia high. We're holding above initial balance high. So whether the trade is dead or it's going to move later is beside the point. The trade is there. The trade location is there. It just needs volume. So it's not dead. And if it gives me the invalidation, I will take it off, but it hasn't. So again, patience. Probably the first line of this job description. What skills do you need? Patience. Ah, okay. Most people don't have that. You wanted everything right now. Right this minute. I want it to move. But you know, I was a swing trader for 5 years, from 2007 until 2012. And if you think this is slow, try waiting for days out of an accumulation on the daily for the move to happen. So this is nothing for me. It's just like, yeah, whatever. I really developed patience when I was a swing trader. Because sometimes your setups wouldn't come in for 2 weeks. And you couldn't just sit down and click buttons. You had to wait for the level to arrive. So you wake up and you're like, it's not there yet. Okay. Wake up the next day, it's not there yet. Wake up next week, okay, it's not there yet. Then it arrives. And then you're like, okay, now let's look for the price action that we want to see. And I traded in the same way. It was just in a much bigger time frame. And then people are like, wow, D, you can hold trades for 6 hours, 7 hours. Yeah, I used to hold them for 2 months. This is fast for me. Desmond says, MGCIB is 40, 42. I don't really look at low like the micros, but I'll check. So the full IB, full contract IB, I need to drop down a time frame to see it. Okay, it's 42.6 for the IB high, and IB low is 10.1 to be like super exact. That's the full contract. They might differ. They might differ because they usually do. So yeah. So a little bit different. Not drastically. Not drastically, but again, it's a couple of ticks difference on the IB high, I think, and 1 tick on the IB low. So it's really not that important. A few ticks here and there, It's not an exact science. Anything that you're looking at should be a zone. Like obviously a IB bounce can sometimes happen on the touch, but you know, it's the grand scheme of things, 2-3 ticks here and there don't matter. Right, they're pushing. See Ahmed? Is it still dead? Just joking, man. That's a bit of banter. We still need that higher high. We're almost there. Not quite. Higher high. Second question, is it going to hold above the higher high? And we'll know by the end of the stream. Just gonna have a look at something. We have NFP this week, don't we? And it's on Thursday. Oh, joy. Is that right? Am I seeing that right? Yeah, Robert says, Coach Robert says, UB can move. Yeah, it can move. It's just the at times that it kills me. Like, you would have to trade it during, like, monetary policy times. And it's just not, like, I really tried trading fixed income products. It's just not for me. Like, goes off for you, fixed income. Hell no. And I worked for a company where Bund was traded a lot. And I didn't even like that. I was like, why? But whenever the monetary policies are happening, man, bonds can move like crazy. All right, is it going to sustain? Is it going to sustain? So I am seeing this correct. It's Thursday, 1:30 p.m. my time, NFP, right? So this finally coming out. On Friday, we have Germans PMI. Ooh. Year-on-year CPI tomorrow. That's tricky because it's like good for copper, that release, but is it going to roll by then? The only thing that I have this week is like, because of the rollover, I'm, a little bit cautious with sort of trending moves because they usually tend to be either completely like gone, it's just barcode, one big barcode, or it looks good, but then it just stops, which you can see on the tape, but it's just really annoying. It's like a CPI, copper should move. What is happening? So yeah, rollover weeks are always difficult in metals sometimes, and especially in energies. Energies markets are like horrible. 3 weeks you get 3 good weeks out of energies in price action, and then after that it's just like, oh yeah, it's rollover, let's sit and do nothing. And then since crude oil went down to 100 ticks a day, which it does in like one single move, it's been on the back burner. So I'm seeing something here with RBOB. Did that roll already? Wow. So RBOB rolled into January already, but I don't think Crude Oil did just yet. It's Cryty saying good morning. Burp. Desmond says, although silver and GC seem correlated lately, GC gives more tickage in the same move. Yeah, but in the same vein, the moves that result over longer periods of time are smoother in silver. It's got less drama. And on gold, you would need a stop loss of like 220, 250 ticks to absorb 2 30-minute candle movement on average. That's the bit I don't like about it, okay? Whereas silver, I can trade it on my regular stops of 45 to 65 ticks and still get the 2R that I'm looking for and still absorb the movement across 2 30-minute candles. So the ATR has gone a little nuts on gold last 3 weeks. Like in the beginning of the year, I was happily trading it at like, I think it was like 60 ticks, and then I went up to double that. And then we settled in a range, better range, slightly smaller, less volatility, but it still had a really good trend. And now it's looking like NQ. Every time I open it up, I'm like, and it's just this, I don't have nervousness right now. Okay, so, what have I done? Let's remove that. GEX2 is reached on gold, but it's still in the range. Like, you know, to me, this was breaking out. This one is not. But they're definitely correlated. Look at them. Look at them. Let's go to micro silver. So negative gamma means that usually the levels will be more of an accelerator than anything else. Maybe we need a little bit more time. We've got 7 minutes until the end of the stream, though. So we'll see. Do we have a correlation here? Yeah, look at that. Look at that. Right, let's do something here. Right, you see that? So now we have a correlation coefficient between silver and gold. So they are almost to a factor of 1. Slight change earlier, but generally pretty correlated today. Can I turn? This is irking me. Colors. Like, nah. They all filled. Style. Plot. Can we just do a line? Top line? Still played with diamonds. No, definitely don't like that. Histogram. Columnus. Columnus. Do you ever do that game where you gotta read every letter? Is that just me? Is that just me being Serbian? Because our Serbian language is phonetic. So like one letter, one word. And sometimes I'm just being silly, you know. Columnus. So close. Should I do a line? I don't know. I can't decide. I'll do a line. It's less sort of kind of an eyesore. But it's still... It'd be nice if you can kind of attach... I know that we've got a price axis here, but it'd be good if... can maybe attach it somewhere else. I like my panels. I like the little panels with data in them. Yeah, now obviously with correlation coefficient, I would not be staring at it on like a 2-minute chart or 1 minute or 30-second chart. I like to look at the overall correlation just to see like 30 minutes and daily, like how different are they. And interestingly, they diverged towards the little bit towards COMEX and yesterday. Or was it after hours? Was this news? Because this happened after hours. Because I didn't trade yesterday. It was so quiet. Like, I'm not going to spend 6 hours watching the price do this. This was like stuck in a, let me see, yesterday's range. So COMEX initial balance was 49 ticks. 49 ticks. And it stayed in that range for quite a while. And then 2 isolated moves up and down, and that was it. Pretty strange. Does Topstep allow go long and Q and short ES? Is that hedging? I think with Topstep you are allowed to short ES and long and Q. What you're not allowed to do, there's been some changes about that. So I think at one point you were even allowed to do like M and Q short and NQ long or something like that. Don't quote me on that. Don't quote me on that because again, things change over time. But short NQ long ES, yeah, but I don't know. To me, that would mean you're sort of grasping at the straws a little bit. Maybe on some days when maybe they've diverged, that could be an idea, but I don't know. I just don't think hedging works on such really low time frames. I think for hedging and for any kind of correlations to, it's effectively arbitrage, right? So when you have two products that are heavily correlated, and then on the day where they diverge, there used to be like whole departments of traders who were only trading that spread. So they would go long one, short the other, and then when the correlation would come back, they would take profits. So obviously you lose on one, you gain on the other. This is also the premise of the calendar spreads, right? If you're doing options trading. But I just don't see how that will work across such a small time frame. Like if something is diverged today, so what are you going to do? Like you guys have enough, like respectfully, you have enough problems trading one product, let alone hedging two, which is already a sophisticated strategy that actually requires quite a different approach to what we're doing here, finding alpha in one product. And now we're kind of deep into like hedging. If you want to hedge, use an option and then one outright futures trade. You know, it's a much better way to hedge. You keep your costs down. Sometimes you know, with long options in particular, you have unlimited gain, although time decay is a problem. And then you can kind of hedge with futures. So, you know, do what sort of market makers do. But, you know, the hedging purpose is all about either taking advantage of the spread between two correlated products that never happens to come back in like minutes, or it's to maintain a market neutral strategy. And again, I don't see how you would do that just with like intraday trading. I don't know. It's just I've done co-integration strategies, mechanical as well, with like a basket of different products, all looking for that arbitrage opportunity. And if you want to look into that, look up arbitrage. But unfortunately, arbitrage these days, unless it's like earnings season for NQ versus ES, or it's something else, arbitrage is so efficient. So any sort of inefficiency between the two correlated products, they come back like literally in a nanosecond. Like as a human, you just can't catch that. Or the divergences are so small so small that they're not worth trading anyways. It's not a good profit margin. You know, you have Jack Pelzer. He traded bonds. He was a bond spread trader. So, you know, maybe you want to ask him about that. Again, I don't think with bond movement that you could hold them with large enough size, because bonds on most days will not move much. They won't move much. They will move 3-4 ticks in like hours. So what you used to have to do is just plow in with like a ton of size. I mean, like a massive size. So when that goes wrong, it really goes wrong. But you can't do it with like 15 contracts. You would have to do it with 150 contracts or 200, 300. You know, something that will make it worthwhile when the spread moves like 1, 2, or 3 ticks where it should be, so that you actually generate some serious profit. So, you know, there are definitely problems with trying to hedge intraday. But hey, don't take my word for it. Try it. I always say, I'm not in favor of it, but you go and try it and report back. If it works for you, brilliant. I'm all for it. Paid indicator. What? Paid indicator? What are we talking about? Hyman. He-Man. Hyman. He-Man? Do you remember, maybe you guys are young. Do you remember Skeletor? I'm showing my age now. All right. Anyways, I'm going to sit on this, whatever, the combine. Still expecting it to rotate through the value. If it doesn't, it doesn't. But I will let this trade go for as long as it will. And yeah, so you will see me in the last hour of fast markets. Again, I don't know, you know, how the setups are going to look. But let's hope something starts moving. Otherwise, I'm going to go in there for a bit of social and banter, it seems. And the report on the VIPs. That's all I have for you today. So we are at time for the stream. Thank you for joining me. Yeah, so let's see what NFP brings. I suppose everybody will be waiting for that on Thursday. What a random day to have NFPs. In the meantime, like I always say on my own channel, let's try to be less grasshopper and more market stalker with every passing day. This was the Euro Trade on TopstepTV. I'm Market Stalker D. Take care.